Hey everyone, and welcome to The Explainer. Today, we're diving into a really fascinating case study in corporate stabilization, AstroNova's fiscal year 2026. And look, this goes way beyond your standard run-of-the-mill earnings report. It's essentially a masterclass in how a business tightens its belt to build a rock-solid foundation for future growth. So if you're into the mechanics of business optimization and turnarounds, you're absolutely going to love this one.
All right, let's anchor these abstract financial numbers to the real world for a second. On one side, we've got a highly complex commercial flight deck, right? Cruising thousands of feet in the air. On the other side, medical IV fluid bags, literally a life or death component in a healthcare setting. These are two vastly different worlds.
But that brings us to a pretty wild question. What do these two extreme, high-stakes environments actually have in common? Well, the answer is AstroNova. Both of these settings rely heavily on AstroNova's highly specialized mission-critical printing tech. I mean, think about it. When a pilot needs critical flight data or a nurse needs a perfectly accurate label on an IV bag, there is zero room for error. None. And that's exactly the arena AstroNova plays in.
So here's our flight path for today's explainer. We'll start with a foundational reset year, then move into aerospace delivers strong performance. From there, product ID gaining momentum, cash flow and capitalization, and we'll wrap up with the outlook for growth. Let's get into it.
First up, Section 1, a foundational reset year. So, fiscal 2026 was explicitly laid out as a crucial period for internal change and stabilization. And what's really interesting about corporate turnarounds is that they aren't just about shuffling numbers on a spreadsheet. They are fundamentally about people. AstroNova knew they had to tighten up their operational execution, and they did this by pushing a massive culture change, focusing on honesty, transparency, and much faster decision-making. The executive team didn't just sit in the boardroom. They got out there, engaging directly with customers. Plus, they got hyper-disciplined with their pipeline qualification, basically filtering leads ruthlessly so they could focus on high-impact prospects. It's really about doing that gritty, non-financial work first, so the financial results can follow. Moving on to Section 2, aerospace delivers strong performance.
To really grasp their strength in the aerospace sector, you've got to understand this specific product, the ToughWriter. This is AstroNova's flagship flight deck printer, and the takeaway here is just its sheer market penetration. Get this, the ToughWriter now represents over 80% of their total flight deck printer shipments. That level of dominance means, as manufacturers are building planes, AstroNova's printers are overwhelmingly the ones getting installed in those cockpits.
And you can definitely see that dominance playing out in their demand metrics. Sales in the second half of the year bumped up 3.3% compared to the first half. But the metric that really steals the show is their book-to-bill ratio of 122%. Now, if you track corporate health, you know that anytime this ratio creeps over 100%, it means a company is pulling in orders faster than they can actually ship them out. It's a massive indicator of growth. They secured $13.6 million in Q4 orders, which leaves them sitting on a really healthy year-end backlog of $12 million. That backlog is gold. It gives management solid, dependable visibility heading into fiscal 2027, as global aircraft build rates keep recovering. All right, Section 3, product ID gaining momentum. Before we dive into the numbers here, we need to contrast how these two segments actually work. Aerospace thrives mostly on OEM, original equipment manufacturer demand, right? It's all about multi-year contracts and clear backlog visibility. Product ID, though, completely different beast. It relies on selling high-value hardware that typically has a much longer initial sales cycle. But the real magic of product ID is what happens after that initial hardware sale. It creates this massive aftermarket retention loop through the ongoing sale of labels, inks, and supplies.
And the data proves that AstroNova's refreshed go-to-market strategy for product ID is really catching on. Second half sales grew 4.2% over the first half. And in Q4 alone, orders jumped by $2.9 million year over year. That locked in a solid book-to-bill ratio of 104%. But look at that final point. This is absolutely the big takeaway. Aftermarket revenue makes up roughly 80% of the total segment sales. It's your classic razor and blade model. They get the hardware through the door, and boom, it spins up a highly lucrative, recurring revenue stream for years to come.
Which brings us to Section 4, cash flow and capitalization.
This brilliantly captures the success of their whole reset strategy. Just look at the stark contrast between the first half and the second half of the year. Their adjusted operating margin started out at 2.6%, but by the second half, thanks to higher volumes and some seriously strict cost controls, they bumped that margin up to 4.8%. That's a 220 basis point expansion.
It proves that as revenue scaled up later in the year, they successfully kept a lid on expenses, which dropped significantly more profit straight to the bottom line.
And naturally, that margin expansion does wonders for the balance sheet. Check out these milestones. Free cash flow didn't just inch up, it completely surged to $11.4 million, up from just $3.7 million the year before. And what did they do with all that cash? They paid down debt, slashing it by $9.1 million over the year. This aggressive debt reduction massively improved their net debt leverage ratio to a very healthy 2.97. Honestly, they've fortified their capital structure so well that they're now officially evaluating strategic alternatives to unlock even more shareholder value.
Now, out of all the financial data we're looking at today, this is the one number I really want you to remember: 69%. That is AstroNova's consolidated recurring revenue for the fiscal year. Nearly 7 out of every $10 flowing into this company is recurring. It just proves the incredible durability of their business model. Even if hardware sales hit a speed bump, that 69% recurring revenue floor offers this incredible level of stability and predictability. Let's look ahead to Section 5, the outlook for growth. So let's look at a major upcoming catalyst. For a while now, AstroNova has had a significant historical royalty obligation in their aerospace segment. In FY25, it cost them $2.5 million. In FY26, $2.1 million. But look right there at the end of the timeline. In the third quarter of fiscal 2027, this obligation officially lapses. It's done. And when that falls away, it unlocks a massive $2 million annualized contribution directly to their gross profit starting in Q4 of FY27. That is pure profit dropping straight to the bottom line without them having to sell a single extra printer. So taking all of this into account, the aerospace recovery, the product ID momentum, and those lapsing royalties, management is laying out some very clear, confident expectations. For the full year 2027, they are officially expecting mid-single-digit revenue growth and an expanded adjusted EBITDA margin. That signals some very strong overall profitability on the horizon. Basically, the reset phase is over, and they are pivoting hard back to profitable growth. To put a human voice to all these numbers, let's look at how the CEO, York Ittman, summed up the year. He said, "The second half of fiscal 2026 was a reset period. Our focus was on stabilizing the business and ending the year having generated more cash, reduced debt, and raised accountability across both segments." It's just a perfectly precise summary of exactly what the metrics show us. Mission accomplished for 2026.
So here's the bottom line. AstroNova didn't just survive a transition year. They actively used it. They tightened ops, expanded margins, and generated a ton of cash to crush their debt. So I'll leave you with this thought as we wrap up today's explainer. With a rock-solid balance sheet, incredibly sticky recurring revenue, and expanding margins, what untapped value is this reset actually going to unlock for AstroNova in 2027 and beyond? Definitely keep an eye on those upcoming quarterly reports because the stage is absolutely set. Thanks for hanging out with me for this analysis and keep learning.